As gold continues to set new all-time highs, the traditional methods of structure analysis face unique challenges due to the absence of historical resistances. But even in the current bull market, there is still one technique that will help you to easily identify the next strong resistances. Please don't forget to like this video, subscribe to my YouTube channel, and let's sort. The first thing that we should do, we should execute wave analysis on a weekly time frame. Based on the waves that we identify, we will execute Fibonacci and harmonic analysis. But first, let's identify the waves. Our first wave is here, the strong directional movement. And what we do, we underline the entire wave from its low to its high. The second significant wave is over here. From that low, a strong bullish wave initiated, and that is a significant movement that we should consider. Also remember a very important rule. Waves can compose more significant wave, and for example these two waves can compose one single wave. You can see that from that low we also got a strong bullish rally, and we can see that it is just one single wave. Traders, learn technical analysis with my premium course. Get 350 pages long ebook explaining you the principles of technical analysis and 3 hours long video course. For more info, check the link in the description below. Moreover, what I would do, I would also take into consideration the historical price action, and in 2020 we formed this strong bullish wave, and at that time here we set a new all-time high. So we have 4 significant waves. Now we will execute the Fibonacci analysis. What we will do, we will apply Fibonacci extension tool based on all the waves that we identified. We will draw Fibonacci extension from the low of the wave to the high of the wave. And here are the important Fibonacci levels that we should consider: 1272, 1618 and 1414. Then what you should do, you should draw the Fibonacci extension levels based on all the waves that we identified. You can see how quickly and easily I do that. Also remember that we got our historical wave right here, so we will also draw the Fibonacci extension based on that significant impulse. And here are all the extension levels that we got. You can see that it looks like a complete mess. Our task here will be to look for the so-called confluence areas, the areas that are based at least on 2 Fibonacci extension levels of different waves. The first confluence zone that I see is right here. That confluence zone is very significant because it is based on 3 different extension levels. The second important area is right here. That area is based on 2 extensions, and we have some peculiar area right here. The next important thing is to always keep your charts clean. So after you identify the confluence zones, please make sure that you remove all other Fibonacci levels from your chart. Here's how your chart should look like after you remove all irrelevant Fibonacci levels. With the Fibonacci extension tool, we already identified multiple potentially important resistances, but you can find even stronger resistances if you consider the harmonics in your analysis. The last thing that we should do, we should apply the harmonic analysis. And with the harmonic analysis, we will identify the most significant structures. In order to execute the harmonic analysis, we will take, for example, this bullish impulse, and we will project that bullish impulse from the completion point of the correctional movement after the formation of that impulse. Here, how we do that. Here is the point where correction ended after the completion of that impulse. So here's how we draw the harmonic movement. Same thing we will do with this bullish impulse. We will copy that impulse and we will project it from the completion point of the correction after the completion of that impulse. You can see that we also have this significant impulse right here, but its completion will be too far from current price levels. Also, let's quickly check our historical impulse, this one, and also draw the harmonics. So with the harmonic analysis, you can see that the harmonic movements indicate the confluence with that area. Even though it is not precise, still we can see that that area matches with the completion of two potential harmonic movements. And we also have a very nice confluence right here. And again, after you executed the harmonic analysis, please make sure that you keep your chart clean. What I did, I removed all the relevant Fibonacci levels, I removed all the impulses from the chart so that we could have only our potentially important zones of interest. These zones will be the next potential resistances, and when the price is approaching one of these areas, from these areas we will expect a bearish movement. That will be the areas where this bullish rally may finally stop. These confluence zones do not guarantee that the price will certainly reverse from there. However, these areas provide potentially important zones of interest. Being applied with multiple time frame analysis and confirmations, you can spot very profitable trading opportunities from these areas. Let me know in the comment section if you have any questions. Also, if you want to learn technical analysis, do not forget to check my ebook and video course. The link in the description below. Also, traders, please watch my other videos.